So when we look forward into this year, we see a somewhat improving market backdrop, and so that's giving us the opportunity to accelerate on the things we've already been working on. That is, leasing, sale of vacant properties, and then selective acquisitions.
So, Paul, what strategic priorities driving Orion Properties' approach to 2026?
Well, it's really the strategic things we've been working on for the past several years. A little bit of the backstory is Orion Properties was founded and spun off as a result of the merger between Realty Income and VEREIT. And those two very large net lease companies, where I was the chief operating officer at VEREIT, they merged together and then spun off their office portfolios into a independent public company, Orion, which I'm now the CEO of. And that asset class was not necessarily particularly favored before the COVID pandemic and became obviously under significant pressure after the pandemic. And so what we've been focusing on is right-sizing our portfolio, selling vacancy that we don't think is going to have long-term success, managing our balance sheet, and of course, working on leasing. So when we look forward into this year, we see a somewhat improving market backdrop, and so that's giving us the opportunity to accelerate on the things we've already been working on. That is, leasing, sale of vacant properties, and then selective acquisitions.
And where are you seeing the best opportunities to deploy capital right now?
So for Orion, we're focused primarily on the office sector, and we really are shifting our focus in a pretty significant manner to focus on what we characterize as dedicated use properties. So those are properties where the tenant occupies the building and can't operate their business, their employees can't operate that business from home. So a lot of generic office buildings, very much subject to work from home, right? So that's, the hybrid office schedules. There's a lot less demand for generic office space. But what we characterize as dedicated use properties, those would be things like government buildings. We own a number of properties leased to the GSA, like FBI, Border Patrol, Social Security offices. They can't really conduct that business from home. And the same is true. We own some flex industrial type properties or laboratory properties. And so that's where we're really going to be focused on, is buying assets where the tenant really needs to operate from that building, because we found we've got much better renewal likelihood in those assets.
Great. And how competitive is it to find those assets?
It's always competitive. Or maybe I should say, you can always find them. The question is, do you want to pay the price for them? There's still somewhat of a dislocation between seller expectations and buyer expectations with respect to where cap rates are. But we see a pretty steady flow of them. We bought a very nice asset in California at the tail end of last year. We've got a few under contract now, so we are able to find some assets.
And what market signal is most influencing your thinking this year?
I think it's really the what I would characterize as a slow but reasonably steady recovery in the office sector. In 2023, for example, we leased 235,000 feet all year. And then in 2024, we leased 1,100,000 feet. And this year, we're in the process of leasing about another 1 million square feet. And this is off of a pretty small base. We only own about 7 million feet. So we're seeing, some pretty strong indications that the market is at least stabilizing and demand is coming back to some degree. And, we just, obviously, we hope that continues.